Silver might be a good opportunity to double your money, triple, quadruple.
If gold and silver follow the same performance over the next 20 years as they did over the last 20 years, gold would hit $47,000 an ounce and silver would hit $800.
Institutions now are coming in buying silver, and especially banks are buying it too. I do think that gold's going to go up, but let's just say you had $1 million or $500,000 in cash. You're better off sitting it in gold and not looking at it like, okay, I'm going to turn this into 2 million or I'm going to turn this into 3 million. Like, it just does what it does. It preserves the $1 million and hopefully goes up. But silver might be a good opportunity to double your money, triple, quadruple.
Especially now, I think it could easily double this year. What I tell my clients to do now is if they've already made a lot of money on silver and they want to protect some of those profits, they can convert that portions of that into gold.
Right. You almost look at it the same way then? Like gold's more
I think gold's going to have less volatility and silver's going to have more motion. So, and also it depends on how long you're buying it for. Like, if you're already older and you've been holding your silver for 30 years, maybe now's the time to, put most of that into gold and just, because you're going to have less volatility, I think, and you might have less time. Whereas, like, I think if you're a younger guy who's accumulating right now, you should definitely be doing a lot more silver, because over the long term, I think, I was looking at over the last 20 years of performance of gold and silver. And if gold and silver follow the same performance over the next 20 years as they did over the last 20 years, gold would hit $47,000 an ounce within 20 years. And silver would hit like $800 an ounce within 20 years.
So percentage gains wise, silver actually increases more there.
Yeah. So on the long term, I think you have a bigger opportunity with the silver. And then, the other thing that a lot of people ask me is, should I buy paper or should I buy physical when it comes to silver? And I did like the math with one of my clients over the phone, because something I didn't know a couple of years ago is when you buy paper contracts, they charge you 0.5% every year for every ounce.
I didn't know that either.
That's the fees that you pay for holding it. So it's 0.5% every year for every ounce.
Okay.
So I did the math with one of my clients, because he said, well, I know I pay premiums when I buy silver, and I know when I sell it, I'm paying a premium too. So what's the bigger premium I'm going to pay? He said 0.5% every year sounds like it's not a lot. So we went over the math based on if silver just has the same performance over the next 20 years as it did over the last 20 years, and he's paying 0.5% every year on his paper, versus he pays a premium from buying silver now, and then a small premium for selling it 20 years from now. And we did it based on 5,000 ounces. And he would pay $150,000 more in fees on the paper versus the premiums from just buying physical and selling physical.
Wow, and storing it himself, whether it's in a safety deposit box or under his bed or whatever he chooses.
That's right. So he saves himself $150,000 on a 20-year period.
Just from the physical versus the paper.
Yeah.
Wow, that's interesting numbers. You did that. That's cool that you did those numbers like that. With a little bit of volatility, like the swings of gold and silver, something that I've been looking into that I think is interesting is that supposedly they made silver a tier 2 asset.
Yeah.
Right? So there's a tier 1 asset in the banking system. Well, let's start with tier 3. Like, what is a tier 3 asset in the banking system? So a tier 3 asset would be like junk bonds, maybe more risky mortgages, maybe like where, I'm trying to think like, we should look it up exactly what a tier 3 asset would be. I would imagine it's more of a risky loan, like maybe some sort of a small business that could be a riskier loan. Yeah. And then there's tier 2 assets, which is less of a risk, like mortgages that the house in the neighborhood is worth $800,000 and they're lending $500,000 or $600,000. Right. So there's $200,000 equity in the loan, right? So that the less risk for the bank would make it closer to a tier 1 asset. And then a tier 1 asset is cash, US bonds, and gold, right? Because there's zero risk there.
Right.
Those are the only 3 tier 1 assets. Yeah. So the tier 2 asset is a little less riskier. And supposedly they made silver a tier 2 asset. That's why we're seeing all of this price increase in the silver. And I'm looking more into it, but I think this sounds accurate to me. institutions now are coming in buying silver, and especially banks are buying it too, because now they have more leverage for their loans. They have more equity on the books.
Yeah.
A bank, right? It's almost like what company do you want to work for? What makes Apple so secure? It's all of Apple's assets.
Right.
Whoever works for Apple, their check isn't going to bounce.
Yeah.
Right? Apple has a good future. Apple has probably a lot of properties everywhere. They probably own the buildings that they work in. It's like Amazon, right? They buy all these buildings. So you want to work for a company like that. And it's the same thing with a banking system. If you have $5 million, who are you going to feel comfortable investing with? If you have $5 million, you're not going to go to some mom and pop bank that doesn't have much history, because it's like, is this going to need a bailout? Is this bank going to go under? What equity do they have on their books? And this is where gold and silver is coming back into the fold. This is what's exciting to me, mainly for gold and silver.
I like how you said that about if you're protecting $5 million and are investing, you want to go to a bank that has a history, it's not going anywhere. And I think that's why gold and silver are safer than assets like Bitcoin. Have only been around for 17 years. When you compare that to gold and silver, well, these have been here for centuries and thousands of years. Right. So what are you going to trust more? Something that just came around 17 years ago, could be gone 17 years from now, or something that we've seen has already been around for thousands of years and it's not going anywhere.
Right.
Somebody was trying to make the argument to me, well, gold could go to zero. And I said, well, so you're telling me there's going to be a time when nobody wants to wear a gold necklace? There's going to be no demand for gold? Right. You're not going to have an industrial demand for it anymore? Yeah. It's literally impossible for it to not be worth anything, because there's never been a time in history where people didn't want gold. That's what gives it its value. Intrinsically, there's something about gold that makes people want it. That's not the same for Bitcoin, or any cryptocurrencies. There's nothing tangible about it. The only reason people buy it is to speculate that they might make money on it later.
Yeah, and I almost feel like people also buy it, Rich, to be like outside of the system. Like they don't trust the government, almost like to get away from the 401k theory.
Yeah, but as soon as the institutions and government started getting involved with it,
I think changed.
I think it lost.
That's why it lost a lot of it.
Yeah.
There was a lot of private transactions being paid by Bitcoin, which is a part of the reason why they try to keep it down, because almost like illegal activities. Honestly, you know what the biggest market for cryptocurrency is? Gambling.
Yeah, and that's how I first found out about it when I was in college. Friends of mine, what they would do is when they wanted to gamble online, they would use Bitcoin to do that with. And to me, that's really the only real application it had, is that people could have, do things that the government weren't involved in. But I don't think that's the case anymore. And I've mentioned it before. A lot of people think that the government actually created Bitcoin to have more control over people. They gave it to them to make them feel like they had something outside of the system. But in reality, it's something that they have an easier way to control and monitor.
And it does seem to be losing its luster that way. That's I think that people are running to stability. And this is why I'm bringing up the tier 1, tier 2, tier 3 with the banking system.
Right.
Because I think that banks are going to have more liquidity on their books. They're going to have more cash on hand. They're going to have more treasury bonds on hand. They're going to have more gold on hand. And I think silver is going to become a tier 1 asset.
It certainly could. And I think a lot of countries are moving away from U.S. treasury bonds. We've spoken about that before. Yeah. And, when you mention stuff like Bitcoin too, it just makes me think, Michael Saylor is probably the largest single holder of Bitcoin through his company, MicroStrategy.
Biggest believer in it.
Yeah. So he posted, he was in an interview, and the interviewer asked him, what do you do if Bitcoin goes to 8,000? And he said, well, I'll just refinance my debt. I'll just roll my debt forward. Mm-hmm. And it's, I'm watching this as somebody one of the main reasons I don't trust the US dollar is because it's so committed to debt. It's so dependent on debt. Yeah. And I'm watching the largest holder of Bitcoin basically say he's dependent on debt. And it makes me feel that Bitcoin.
That. I think you sent it to me.
I did send that to you. And that was my, watching that, I took away from it. I said, he's just as dependent on this debt. And if, he's going to be upside down like $20 billion if that ever happened. And he thinks that his banks are going to just let him refinance that debt with no problems. Right. He's going to get liquidated, and what's going to happen is he owns 3% of the whole market share. Right. So if it's already down to 8,000 and he has to liquidate his 3%, that could bring it down from 8,000 to 5,000 or 4,000. And once it goes there, who's going to still believe in it at that point? Because the majority of people that own it, they don't own it for any other reason than they think they're going to get rich off of it. And if you put 100,000 or 200,000 into Bitcoin and you watched it go up to $1 million, and now all of a sudden you're looking at your what was once $1 million and now it's down to 20 grand.
Right.
Are you still holding it at that point?
No. Yeah, I wouldn't think so.
I don't even think they'd be holding it that long, but even if they still were, I think they would take their 20 grand that they have left over and run with it at that point.
Yeah.
And so, that's why I really think that with him even talking like that, it loses a lot of confidence for me. And that's why JP Morgan too, they put out a new projection for gold saying they think it's going to 8,500. And one of the reasons they indicated when they said that,
within a year or two, like what time frame?
within the next couple of years.
Yeah.
And one of the main reasons they noted in there is because they believe that investors are trusting gold more than Bitcoin and crypto.
Well, and that's what I was just going to say. You talk about other countries like dumping U.S. Treasury bonds. Like China started that a while ago, and now Japan was like one of our last creditors, and they're dumping them because they're not doing well, right? So it's almost like a scramble for stability, right? So what is stability? And this is the opposite of Bitcoin, like you're kind of talking about. How is the United States going to remain the world leading currency? How is the United States going to be on top, if you will, where every oil transaction used to have to happen in US currency? How do we get back to that? And how we get back to that is stabilizing our monetary system. Right. So how do you do that? And I would think that's where gold and silver are going to come in. That's why central banks are loading up on gold. I heard it said the other day, Rich, and I thought this was very interesting, that they're not buying gold trying to fix the monetary system as it is now in preparation for the new monetary system. And what I think, and I could be wrong, right? But what I think is that it's some sort of a digital currency. And I'm not talking about Bitcoin. I'm talking about like the central bank digital currency, like a CBDC.
Yeah. Because backed by gold.
Backed by gold, of course, because fiat currency doesn't work, right? And that's what we've proven since 1971, right? I think that a digital currency makes sense because the government makes money from taxes. And when you're operating under a digital currency, you're not hiding anything, right? So think of a business that gets cash, a delicatessen, a barbershop, a nail salon, landscapers, right? Whatever you would pay cash, like, some people still do pay cash, maybe not the newer generation, but the older generation, we grew up with cash is king.
Yeah.
And now the newer generation is cash is trash. Yeah. That's why Bitcoin, I think, created this huge buzz and the privacy with the Bitcoin. But I think what's going to happen is we are going to have some sort of a digital currency so the government could collect more tax revenue. But I do think it's going to be backed by gold and silver, and especially for the banks, because we need to remain the world leading currency. And the only way to do that is by stabilizing the monetary system. And I don't see any other way better than gold.
Right.
Yeah. In my opinion, Bitcoin can't do that.
No.
It doesn't have the history. Gold has a 5,000 year history.
Yeah.
And Bitcoin, really, like you said, gold is still the best conductor of electricity. It is. Gold does have industrial use. Not that they're going to use it.
Heat too.
Oh, is that right?
It conducts heat better than any other element.
Okay.
And the thing about, like I said, is that Bitcoin only has one use, and it's, people buy it as a speculative, they want to make money on it, whereas gold has other uses besides that. It has intrinsic value. People want it to use it as jewelry. They have an industrial use for it. And the same thing with silver. I just think, like we said before, that silver has, is more scarce right now. I think that there's much more industrial demand and not enough physical supply available.
Which is getting revealed.
Which is getting revealed now. And, I think that the price right now the silver markets are closed in China because of the Chinese New Year.
Yeah.
And we're still seeing some strength. I think it's very possible when that market reopens that we shoot back up over 80 and maybe even to the low 90s. And so, what I was talking to one of my clients about the last couple of days is that, when we had all that hype built up when silver hit 118, there were a lot of people coming out of the woodwork that never bought silver before because they're seeing all the headlines and they're buying it for the first time. Those are basically what I would say, not very skilled investors. I would say those are people that are just buying headlines, buying hype. They probably bought Beanie Babies in the 90s and thought they were going to make millions on those too.
Right.
But the people that are very savvy investors waited until we saw that drop back to the 60s and the low 70s, and now they're calling me up buying as much as they can. I just had a client call me last night at like 8 o'clock at night, and he says, hey, I told you I was trying to sell my condo. I'm really rushing this closing. I got it set for Friday now, and we're going to put that right into silver. And he's excited because he said, I'm glad that this happened now. I had another client that was looking to roll over his IRA, and he was traveling a lot. And while he was traveling is when we saw silver go from 80 to, over 100. And he held off because he said, you know what? I don't want to do it right now. I don't want to roll over into $118 an ounce silver and $5,500 an ounce gold. Right. Well, he called me up on Monday and said, hey, I think this is the time right now.
This is the little dip he was waiting for.
Yeah, this is exactly what he was waiting for.
Well, you know what's getting difficult too, to speak to what you're talking about, to add to, is that it's getting harder to get the coins too.
Yeah.
It's getting harder to get the metals.
Right.
Because if silver was at $125, right, and you had wholesalers and investors buying at, let's just say $120, $125, now it's at 70, they're stuck with that inventory.
Yeah.
Right? Just because the price drops, who's going to sell at a loss?
They're not.
So people will say, silver dropped 72, I'll take 100 ounces.
Yeah.
Okay. I don't have 100 ounces.
Yeah.
Good luck getting it. You know what I mean? Like, and then if we call a wholesaler and say, do you have anything? Yeah, but the price is $79. Yeah, but silver's at 72. Okay, but I paid, 79. I can't give it to you for 72. Yeah. You're not selling the price. You're selling wealth. You're purchasing wealth. You can't really put a price on that. You know what I mean? And it is going to come a time where they're not going to be able to get any silver.
Yeah, absolutely.
So I wouldn't harp on the price of 78 or 73 or 82 or maybe it's going to drop to 68 or 90 for that matter. It doesn't matter. Get in while you still can. People have to change that mindset. It's almost like you invest in it. You're not day trading.
Yeah.
You know what I mean? You're preserving your wealth. And when you look at it through those lenses, it changes the perspective,
Yeah. A lot of my best clients, they just pick a time frame. It's either going to be monthly, it's going to be quarterly, or it's going to be annually. Right. And it's always going to be just, I need 10,000 every month to pay my bills, but I'm bringing in 15,000. I'll do 3,000 every month into metals, and then over the if they do it quarterly, they just send me a check for 12,000. If they do it annually, they'll send me a check for 50 grand. But whatever it is, they just do it over time. And I've been doing this for 11 years now. So I've got clients that have been doing that long enough that they've seen a huge increase in the value of
even like with the IRAs, we have that client that has added to his IRA each year or every other year. I mean, look, he's probably tripled his money, maybe 4 times.
Yeah, just in the last 2 years.
Just in the last 2 years.
Yeah.
And I think that's going to happen again, Rich. I really do.
Right.
So, I think that's good for now. Let's wrap it up.
Yeah, so give us a call at Premier Coin Galleries. The phone number's in the description. And you can check our website at premiercoingalleries.com. My name is Rick Bruckner, and this is Rob DeMarco.